So, good morning class. Anong araw ngayon? Ah, April 18, 2020, Saturday, 6:30 AM. So, continue natin ang discussion natin sa MAS Financial Management. So, eto, nilagay ko dito kung ano yung specific point na sinabi sa syllabus ng board exam in regards to this topic. Sources of short-term funds, trade credit, bank loans, commercial papers, receivable factoring, ito rin, estimating cost of short-term funds, annual cost of credit, trade credit, effective and nominal annual rate of short-term funds, which is basically the topic of working capital management pa rin, pero financing strategies na. Yan na financing strategies, ang meaning lang yan, in layman's term, saan ka kukuha ng pera para panggastos mo, para pang-invest mo sa iyong working capital. Kaya nga, working capital management, financing strategies. Saan ka kukuha ng pera and paano mo gagamitin yung pera na yun. So, ito ang content ng discussion, introduction, financing strategies, short-term credit, advantages and disadvantages, sources ng short-term financing, anong mga factors na kinoconsider, and yung mga unsecured and secured sources. Now, sa introduction, one of the most important decisions that must be made with respect to working capital management is how short-term credits will be used to finance working capital. So, yun yung important consideration when it comes to working capital management. Paano mo i-manage yung perang nakuha mo sa iyong working capital? What is the most effective way to manage that? Now, financing strategies. Financing strategies of the company usually depends on the financing needs of the company. Siyempre, kung ang financing needs mo is around 1 million pesos lang, huwag kang hihiram ng pera na more than 1 million pesos kasi sayang or adverse yung magiging effect sa company mo. Dapat kung ano lang yung kailangan mo, yun lang dapat yung magiging financial management mo. Yun lang dapat yung pagkukunan mo. So, categories of financing needs of the company, it's permanent on seasonal. Sa permanent, if naalala nyo yung pagka-discuss natin sa previous topic, sa permanent needs class, yung what is normally used in the operating needs of the company, in the normal operations of the company, kung ano yung kailangan doon, which is usually the minimum amount kailangan para sa operational needs ng company. Sa seasonal needs naman class, ang pinapertain niyan is yung the fluctuations that are in line with the fluctuations that are in line with the operational needs of the company. Like for example, sa Christmas, mas kailangan nila ng maraming workers. So, yun, seasonal need yun. Pero sa permanent need, kung for example, consistent lang all throughout yung operations ng company, so kung ano lang yung kailangan, which most of the time is the minimum requirement, yun na yun, permanent need. So, permanent need and seasonal need. Punta naman tayo sa alternative short-term financing strategies or policies. So, if matatandaan yung discussion natin sa previous topic, na-mention natin tong tatlong to. Recap lang, si aggressive financing strategy or policy, ang pinapertain niyan is that yung short-term liabilities mo, yung short-term liabilities na na-incur mo, na na-acquire mo, you are using that to finance not only your seasonal needs, but some or all of your permanent needs. Yun si aggressive financing. Si conservative naman, you are financing all of your permanent and seasonal needs, or seasonal is also known as temporary, all of your permanent or temporary seasonal needs by long-term debts. Yun yung ginagamit mo for financing these two sa conservative financing strategy or policy. Now, pagdating naman kay hedging or self-liquidating financing strategy or policy, ang ginagamit mo, pina-partner-partner mo, mina-match-match mo siya. Like for example, kung short-term needs or short-term assets, ang ginagamit mo to finance that is short-term liabilities. Kapag long-term needs naman or long-term asset, ang ginagamit mo to finance that is long-term liabilities. Pina-partner mo siya. So, ito yung mga alternative short-term financing strategies na na-discuss natin sa previous topic. Now, ano ba ang short-term credit? Well, ang short-term credit is also known as short-term or current liability. This is any debt scheduled to mature within 1 year or one operating period or operating cycle. So, familiar na kayo sa concept na to since 201 pa lang to, alam nyo na, si short-term liability. Now, ano mga advantages and disadvantages of using short-term financing? Well, ang advantages nakalagay, speed. Bakit speed? Sa short-term financing kasi class, less requirement ang kailangan as compared to long-term financing. So, since sa short-term financing, konti lang ang requirements na kailangan, mas mabilis ang proseso para makuha ito. Minsan pa, napaka-relax na, sobrang relax ng mga proseso or requirements para maka-avail ka ng short-term financing. And considering the fact that many of the short-term financing are included in the normal operations of the business, so, mabilisan talaga. Next is flexibility. Anong meaning ng flexibility? Ibig sabihin, you have many rooms to maneuver on how to manage your short-term financing. Marami kang pwedeng gawin. Kasi, hindi kasi ganun ka-stringent or ka-stricto yung requirements when it comes to short-term financing. Kaya, considered siya as very flexible. Especially, i-compare mo sa long-term financing o sa long-term liabilities. The third is cost associated to short-term financing versus long-term financing. Anong very good example nito? Interest cost. Like sa short-term financing, minsan pa nga, wala nang interest cost na nagpe-pertain sa short-term financing. Sa long-term financing, since matagal to siya, since long-term to siya, tumataas yung cost-related when it comes to long-term financing. Sa short-term financing, nami-minimize mo siya. Bakit? Dahil short-term lang siya sa ikli ng panahon. Like for example, sa interest cost, hindi ganun kalaki ang babayaran mo if ever may interest kang kailangan bayaran kasi short-term lang siya, mabilisan. When it comes as compared kay long-term financing, since matagalan, more than 1 year, tataas yung magagastos mo sa interest cost. So, example lang yan ng mga cost associated na kung saan mas mura or mas mababa kay short-term financing as compared kay long-term financing. Now, since may advantages, may disadvantages din. Ano to? Well, the risk associated to short-term financing versus long-term financing. Anong very good example yan? Liquidity risk. Bakit? Kasi sa short-term financing, within the operating period or within 1 year, kailangan bayaran mo na yan. Kasi nga, short term. So, ulitin ko lang, a good example of this is liquidity risk. Bakit? Kasi short term financing yan. So, kailangan mo yung bayaran within the operating period or within the 1 year cycle. Kasi nga, short term financing yan. As compared kay long term financing kung saan you have a considerable amount of time to pay it, to settle that obligation. And as we know, mas may time ka para makapaghanap ng pambayad mo kay long-term financing as compared kay short-term financing kasi within the period or malapit na yung date na kailangan mo siyang bayaran. So, risk associated to short-term financing and long-term financing, may disadvantages din yan. So, punta tayo sa sources of short-term financing. Saan mo yan kukunin? Well, ito, nilista. Yung mga unsecured credit sources, mga spontaneous and negotiated, meron ding secured credit sources. Pumunta tayo kay unsecured credit. Sa factors muna pala tayo. So, ano mga factors na kinoconsider kapag pipili ka ng source of short-term financing? Ito, nakalista. 4 sila. The effective cost of credit. Meaning, ano yung mga cost related sa pagkuha mo ng credit na yan, sa pagkuha mo from the source of credit na yan. Nakakamura ka ba? Makakatipid ka ba? Flexible ba? Maayos ba yung pagbayad? So, tingnan mo yung cost na associated sa pagkuha mo ng short-term credit na yan. Next is the availability of credit. Siyempre, tingnan mo, may chance bang makuha mo yung ma-avail mo yung short-term financing na yan, yung short-term credit na yan. Baka hindi available for you. Baka hindi ka qualified to get that, to acquire that. So, check if available yung credit, available na makuha mo. Third is the influence of the use of a particular credit source on the cost and availability of other source of financing. So, tingnan mo yung source kung saan mo kukunin yung short-term credit na yan. Tingnan mo kung may effect ba to, lalo na kung may adverse effect ba to sa other financing management decisions na gagawin mo. May effect ba to sa other sources ng short-term financing mo? Tingnan mo, baka may adverse effect yan. Pag may adverse effect yan, look around. Look the other way kasi delikado yan. And lastly, any additional covenants or restriction. Siyempre, may mga short-term financing or short-term credits na bibigyan ka ng mga stipulations. Tingnan mo kung ano yung mga stipulations na yun. Kung beneficial ba o adverse sa iyong company. Magko-cost benefit analysis ka ba? Iisipin mo, worth it bang kunin ko to or avail ko tong short-term financing na to? As considering the fact na medyo hindi favorable sa akin yung mga restrictions or stipulations na nakalagay sa agreement. So, tingnan mo yung mga covenants or restriction. So, ito yung mga factors na kailangan mo i-consider kapag kukuha ka ng short-term funds or sa short-term financing mo. Now, pumunta na tayo sa sources ng short-term credit. Ito, unsecured sources. Ano bang mga unsecured sources? Well, ang nakalagay dito, these include all those sources that have their security only the lender's faith in the ability of the borrower to repay the funds when due. They are obtained without any pledging specific assets as collateral. So, as we can see here, from the word itself, unsecured, big sabihin, wala kang guarantee of payment at the first place. Bakit? Kasi nakadepende yung trust mo, nakadepende yung security mo kumbaga sa characteristic or sa ugali ng borrower. Nakadepende doon yung chances na babayaran niya yung short-term liability. Kaya nga nakalagay the security is dependent on the lender's faith in the ability of the borrower to repay the funds when due. So, yun si unsecured sources. Considering the fact pa na wala kang hindi mo ginagawang collateral ang mga specific assets mo. Kaya ito, from the word itself, understandable naman, unsecured. Walang security of payment. Now, anong mga categories under unsecured payment? Well, dalawa sila. Si spontaneous at si negotiated. Now, ano ba itong si spontaneous sources? Well, si spontaneous sources daw, these are short-term credits arising from normal course of business. So, as we can see, ito yung sasabi ko kanina, na may mga short-term credit na nanggagaling mismo sa normal operations ng business, sa normal course ng business. There are no interest costs attached to these sources. Pero, kasi nga, kung considering the fact na, na nanggagaling to sa normal course ng business, negligible, if ever man, ang effect ng interest cost. Kasi nga, short term siya, as we know. And, however, they may have some implicit costs. Pero, guys, dito, baka may mga implicit costs yan, such as opportunity costs when it comes to the spontaneous sources. Kasi itong interest cost, as we know, explicit cost yan siya. Yung si interest cost. Now, sa implicit cost, as we know, under sa kanya si opportunity cost. So, baka may mga opportunity costs na kailangan mo i-consider when it comes to the spontaneous sources. Now, under spontaneous sources, may dalawang major sources rin. Si accounts payable or also known as trade credit. Bakit trade credit? Kasi nanggagaling siya sa normal operations ng business, sa normal course niya. And next is the accrual or, as you know, accrued expenses. Now, si accounts payable tayo. Si trade credit. Now, ano to siya? These are debt arising from credit purchases by a firm without issuing any formal note as an evidence of the firm's liability to its supplier. It is considered as a primary source of spontaneous financing because it arises from ordinary business transaction. So as you see, ito yung nangyari sa normal operations ng business. Kapag bibili ka ng product, tapos hindi cash ang babayaran mo, meaning nun, credit ang mangyayari. Ike-credit sa'yo. Magiging accounts payable on your part. And since accounts payable on your part yan, hindi na kailangan ng mag-issue ng formal note like magkasunduan pa. Parang normal operations na ba? Kumbaga. Kaya napaka-flexible nito, napaka-speedy ng transaction na to kasi nasa normal operations na siya ng business. Parang normal na ba? It's already a standard procedure, kumbaga. And since nasa normal operations ng business, it is a primary source of spontaneous financing. Now, considering the trade credit terms, siyempre, pag mag-avail ka ng trade credit, mayroong mga stipulations o mayroong mga conditions na kailangan bago ka yan papayagang maka-avail ng trade credit. Bago ka ma-satisfy or ma-close yung transaction. Ito, mga trade credit terms, cash on delivery or and cash before delivery. Net period, net period, without discount or with discount, and dating. Ito mga trade credit terms na usually stipulated or under conditions para ma-avail mo yung accounts payable, para ma-avail mo yung trade credit na ino-offer ng supplier or ng pinagbilhan mo. Now, trade credit financing. Ito na. Paano mo siya financial management? Paano mo financial management si trade credit or si accounts payable? Well, dito nakasabi, availing trade credits technically daw is not discretionary financing. Bakit? Bakit siya hindi discretionary financing? Kasi nga, it is within your normal operating business or normal operating cycle. From that itself, na hindi mo may iwasang mag-avail ng trade credits. Hindi mo may iwasang mag-avail ng magkaroon ng accounts payable. Hindi mo choice yan. Sadyang mangyayari yan kapag gagawa ka or kapag mag-ooperate ka ng business. Kaya nga, hindi siya discretionary financing. Hindi discretionary financing ang pag-avail ng trade credits. Kasi ang source niya is yung normal operations ng business mo. Para hindi ka makabilang trade credits, hindi ka mag-ooperate ng business mo. Na kapag hindi ka mag-ooperate ng business mo, anong sense na nagtayo ka pa ng company? So, yun. So, ulitin ko lang, si trade credits, hindi siya discretionary financing kasi wala kang choice but to avail it. Bakit? Kasi it is within the spectrum of the normal operating cycle ng iyong business. Pero, nakasa dito na may discretionary portion pa rin sa topic na to. The discretionary portion of trade credit financing lies on the period when the company pays its accounts payable. So, yun. Yung availing ng trade credits na yan, hindi mo choice. Kasi, sa normal operating cycle yan, sa normal operations ng business mo. Pero, kung kailan mo babayaran yung credit na yan, yun, doon ka may choice. Doon ka may discretion. Repeat, kung kailan mo babayaran yung trade credit na yan, yun, doon ka may discretion. Doon ka may choice. Doon ka may chance, may ability na makapag-apply ng financial management. Now, sa payment decisions mo na yan, take this into consideration. Iti-take mo ba ang cash discount or hindi mo lang siya iti-take? Kasi, as we know, cash discount, it means na early ka magbabayad. So, kapag early ka magbabayad, ma-avail mo ang cash discount. Or, if hindi mo kaya mag-early magbayad, so, hindi mo iti-take ang cash discount. Second is payment at the last day of credit terms. Ito, isasagad mo. Kung 30 days ang credit terms, isasagad mo sa 29th or on the day of the 38th, dun ka na mismo magbabayad. And third, stretching accounts payable. Ito, makikipag-negotiate ka kay supplier. Makikipag-negotiate ka kay seller. Nasabihin mo, uy seller, pwede extend natin yung trade credit ko. Kasi wala pa akong pondo ngayon eh. So, yan, stretching accounts payable. Now, ano yung mga cost in relation to this? Ano yung mga cost na may incur ng company when it comes to credit trade financing? Ito, nakalagay. Without cash discount. Kapag wala daw cash discount, may implicit cost ka. Ano tong implicit cost mo? The difference between the selling price through cash purchase and credit purchase. Na kapag daw may difference, or obviously may difference yan kapag cash or kapag magbabayad ka agad ng cash as opposed kapag credit yung pag-purchase mo. And yung implicit cost yan is if the credit purchase are stated higher than cash purchase. So, obviously, kapag magki-credit purchase ka, mas mataas yan compared kay cash purchase. And yung difference nila, yun si implicit cost. And sa pagdating sa explicit cost, wala siyang difference or wala siyang cost. None. Nada nakalagay dito. Obviously, hindi kasi naglalagay ng interest rate. Para hindi naman siya para isang loan na maglalagay ka ng interest rate kasi normal operations ng business 'yan. Kaya wala yung explicit cost. Na kapag naman daw may cash discount, paano 'yan? Well, nakalagay dito. Sa implicit cost, mayroon kang cost. Annualized cost of foregone discount. Ang formula nito is approximate effective annual cost of foregoing cash discount. Ito, discount rate divided by 100% minus the discount rate times the number of days in a year divided by credit period minus discount period. Now, anong sense nito? Ano ang pinapertain nito? Well, simple lang. Isipin mo, sabihin natin ang credit term is 10 days. Pag nagbayad ka within 10 days, meron kang 2% discount. Pero pag hindi mo in-avail yun, you have a credit term of 30 days para bayaran yung utang mo. Now, for example, meron kang 1 million pesos nakalaan na para pambayad sa trade credit na yan. Isipin mo, may dalawa kang option. Either avail mo yung cash discount or i-avail mo na lang yung normal credit terms na makakabayad ka within 30 days. So, sa dalawang choices na yan, mayroong magko-cost benefit analysis ka. Like for example, sa pag-i-avail mo ang discount, siyempre, may benefit ka, which is, mas less na yung babayaran mo as compared sa normal price na babayaran mo kapag hindi mo in-avail yung discount. Mas makakatipid ka. Yun yung benefit na makukuha mo sa cash discount pag in-avail mo yung discount. Now, sa second option mo naman na hindi avail ang discount but rather isagad mo yung payment ng accounts payable mo, ng credit mo, yung 1 million na yun, pwede mo pang i-invest sa other assets ng iyong company. Like, for example, sa marketable securities. Na, pag in-invest mo yun sa marketable securities, kikita ka na. Tapos pag kumita ka, ibebenta mo agad yung marketable securities na yun. Tapos yung 1 million doon, ipapambayad mo sa trade credit mo. And apart from that, meron ka pang kinita from investing it beforehand sa marketable securities. Now, with that, considering that fact, iisipin mo, saan ako mas magkakaroon ng benefit? Sa pagbayad agad-agad ng aking trade credit para ma-avail yung cash discount, or i-defer ko muna yung pagbayad ng trade credit, hindi ko i-avail yung cash discount, pero i-invest ko sa other investments yung pambayad ko sana sa trade discount para before ko bayaran yung trade discount, may napaggamitan pa ako ng 1 million pesos na yan. So, yun yung mga considerations na kailangan mong i-take into account kapag mag-a-avail ka ng cash discount or hindi. So, yun si implicit cost. Ito yung pinapertain ng formula na to. Now, sa explicit cost naman, wala. Now, ano bang advantages ng trade credit? Well, availability and flexibility. Sa availability, bakit? Readily available. Paano natin nasabi yan? Normal operations na yun ng business. Automatic, nandyan na yan. No need for negotiation unless si supplier medyo nagpapasigurado, medyo nag-make sure na makabayad ka. So, baka may mga stipulations yan, additional stipulations or conditions or restrictions, kumbaga. Next is the flexibility. Meaning, payment can be made anytime within the credit period and may be stretched depending on negotiation with the supplier. So, may flexible C, accounts payable or trade credit. Pupunta naman tayo kay accrual or accrued expense. Now, ano to siya? These are company liabilities for services that have been provided for the company but are not yet paid. So, may mga services na na-avail ang company, pero si company, hindi niya muna binayaran. Yun ang mga accrued expenses. Now, ano mga common source ng accruals? Well, labor, like salaries and wages, taxes, and interest. Pero, pag i-apply na natin ng financial management ang accrual accounts mo or mga accrued expenses mo, hindi lahat yan pwedeng ma-financial management. Or, yun, hindi pwedeng ma-applyan ng financial management. Bakit? Dito naka-explain eh. Like trade credits availing of accruals as financing sources technically non-discretionary in nature. Bakit? Kasi, required kang bayaran yan. Required kang bayaran ang salaries and wages ng iyong mga trabahador. Required kang magbayad ng taxes. Required kang magbayad ng interest. Hindi yan discretion mo. Also, hindi yan sa discretion mo. Kasi nga, non-discretionary in nature. Then also, only accruals controllable by the company may have discretionary characteristics in these sources of financing. Kaya nasabi ko, taxes are controlled by the government, hence they are required. Due dates are set, usually 10 to 15 days after close of each month. Then, the most common source of accrual accounts financing is the unpaid salaries of employees. So, as you can see here, ang in-explain lang nito, is that the accrual financing of the company or availing the accruals or the accrued expenses is non-discretionary by nature kasi si a company walang choice but to pay for those because those are the requirements when doing business, such as pambayad sa labor, pambayad sa taxes imposed by the government, and pambayad sa mga interest. Now, pero the company may have discretion on the period of payment for the employee's salary, which pwede sa mag-choice at the end of each month, monthly at 10 days, or after the close of each month, every half month, quincenas. So, same kay accrual, kay trade credit, wala siyang choice or wala siyang discretion to avail that short-term financing. Pero may choice siya when to pay that short-term financing. So, ulitin ko, same kay accounts payable or kay trade credit, itong si accrual, itong si accrued expenses, wala siyang discretion to avail or not that short-term financing because it is required, because it is normal, because it is unavoidable. Pero, si company, may discretion siya when it comes to choosing when to pay that short-term financing. Doon, may choice siya. So, cost of accrual financing, implicit and explicit, wala. So, pumunta naman tayo kay negotiated sources. So, ano ba itong negotiated sources na to? Well, ito daw yung mga short-term credits arising from negotiations entered into by the borrowing firm and the potential creditors. Itong mga potential creditors, usually mga banks or other corporations din sila. Then, this negotiation or this transaction is evidenced by a formal note or some other documents. So, makita natin as opposed kay spontaneous, ito, wala halos negotiation. Bakit? Kasi it is made on normal operations ng business. Na pagdating kay negotiated, medyo nagkaroon ng formalities kasi nagkaroon na ng negotiation between the borrower and the creditor. And since naging mas formal na yung negotiation nila, this transaction is evidenced by a formal note or some other documents. Ito si negotiated sources. May usapan or negotiation or agreement na nangyari between the two parties, between the borrower and the creditor. Now, may dalawang major sources ang negotiated sources, which is the commercial bank loan or commercial paper. Now, ano ba itong commercial bank loan? Well, ito yung mga short-term business credit provided by commercial banks requiring the borrower to sign a promissory note to acknowledge the amount of debt. So, ito yung mga binibigay na credit ng mga commercial banks. And itong mga credit na to, mga short-term. Kung saan, this is evidenced by the borrower, yung nanghiram ng pera, by him signing a promissory note to acknowledge the amount of debt. Now, as you know, itong promissory note na to, this is a legal instrument na kung saan nakalagay or nakasaad yung mga agreements, stipulations, conditions ng transaction or negotiation between the borrower and the creditor. So, promissory note, isa siyang legal instrument. Yun ang pinapertain ni commercial bank, itong transaction na to. Now, ano ba yung mga types ng short-term unsecured bank loans? Well, first is the single payment notes. Ano to siya? Ito yung mga short-term, one-time loan made to a borrower who needs funds for a specific purpose for a short period. So, one-time payment lang to, one-time agreement. Resulting instrument, a note stating the term of the loans, including the maturity period of the loan and the interest rate, usually stated on a per annum basis. So, notes payable ang pinipertain nito. So, single payment notes, ito yung mga one-time agreement lang, one-time transaction lang, na kung saan hihiram ng pera si borrower kasi kailangan niya lang ng additional funding. Short term ang pinipertain nito. Yun si single payment note. Na, punta naman tayo kay lines of credit. So, itong lines of credit, kung matatandaan nyo, diniscuss natin to sa previous topic sa working capital. Na kung saan si lines of credit, parang informal agreement siya, or discuss na lang natin dito since stated naman, this is an informal agreement between a bank and a borrower and the borrower company, specifying the maximum amount of unsecured short-term borrowing the bank will make available to the firm over a period of time, usually 1 year and subject to 1-year renewals. So, as we can see here, ito kung saan, like na-discuss natin before, na kung saan si company, instead na mag-keep siya or mag-hold siya ng contingency funds, or contingency funds, yung mga emergency funds, yung reserve funds, instead na mag-hold siya ng ganun, mag-ano na lang siya ng informal agreement with the bank kung saan that bank, kapag kailangan ni company ng extra pera, that bank will provide the company with the money para hindi na mag-keep ng hold or mag-hold ng pera like contingency cash, emergency cash, or reserve cash si company. Hihiram na lang siya kay bangko since that bank will make that cash available to the company. But this is an informal agreement. Now, siyempre sa agreement na yan, para makasecure si bank ng proper compliance or proper payment or to secure proper compliance kay company, maglalagay yan ng mga certain restrictions or conditions kung saan ito yung iba sa kanila. Operating change restriction, kung saan the contractual restrictions that the bank may impose on a firm's financial conditions or operations as part of the agreement. So, ito yung restrictions na ini-impose ni bank pertaining to how the company will operate the business or pertaining to its financial condition. Like sabihin ni bangko na, uy, company, huwag kang maging masyadong risky sa iyong mga operations. Dapat risk-averse ka. Dapat relax ka lang. Huwag kang mag-take ng risk kasi baka yung risk na tinitake mo magkaroon ng adverse effect sa iyong company. So, Yan yung mga operating change restrictions. Next is yung mga compensating balance. A required account of balance equal to a certain percentage of the amount borrowed from the bank under the same agreement. So, ito yung parang mga maintaining balance. Yung ikikip or i-hold ng bangko sa account ng company. Last is the annual cleanup. The requirement that for a certain number of days or months during the year, borrowers under the line of credit carry a zero loan balance. Meaning na yan, there are certain times or periods within the year na kung saan dapat walang utang si company sa bangko. Yun ang annual cleanup. Carry a zero loan balance. Certain time within the year na kung saan wala dapat utang si company sa bangko. Yun si annual cleanup. So, ito yung mga restrictions or conditions na ini-impose ng bank or ng financial institution when it comes to extending a line of credit. Now, interest rate on this type of agreement is usually stated as a floating rate, the prime rate plus a premium. Bakit? Special ano to special transaction to. Kaya, pag special transaction yan, considering the fact that you're reserving some amount of cash para ibigay kay company, siyempre kailangan yan ng additional payment, additional income, or additional service fee. Kaya, prime rate plus premium. And lastly, si revolving credit agreements. Na ano to siya? Well, as compared kay line of credit, this is a formal legal commitment by the bank to extend credit up to a stated amount or stated maximum amount for a given period of time. Now, as we can see, itong si line of credit, informal agreement siya. Itong si revolving credit, mas formal siya, may legal commitment pa. And due to the features of this type of loan, the bank usually charges commitment fee on an amount unused by the borrower. So kapag example 1 million yung committed na amount, yung amount of committed by the bank, tapos si borrower, let's say 800 lang ang ginamit, yung 200 na yan papatungan ng commitment fee yan yung magiging basis ng commitment fee ni bangko, basis ng percentage ng commitment fee ni bangko. So ayan, si revolving, ito recap natin, si single payment, one time transaction lang between the bank and the borrower. Si lines of credit, informal agreement na kung saan si bangko magagawa ng paraan to make available cash para kung kailan kailangan ni company ng cash, mabibigay niya to kay company. Pero ito ay isang informal agreement. Si revolving credit agreement naman, as compared kay line of credit, mas formal siya and legal commitment na kung saan si company will make plans to make cash available sa company kung kailan kailangan ni company ng pera, mabibigay ito ni bangko. So, yan ang mga types of short-term unsecured bank loans. Now, punta tayo sa cost of bank loans. Ano ba ang cost na lilitaw from this transaction? Well, explicit cost. Ano to? Effective interest on the loan. Siyempre, may interest kang babayaran. Plus add-ons. Ano yung mga add-ons na yun? Premiums, compensating balances, mga fees. Yun yung mga explicit cost. Now, computing for the effective interest rate without compensating balance, discount rate, ito, computation kung in regards to the interest rate. Kapag may compensating balance naman, ito yung mga formulas na gagamitin mo. So, madali na lang yan. So, para sa class natin, if ever babalik ang klase, yung mga formulas na binibigay ko, lagay nyo lang sa index card. Pero pagdating sa board exam class, kailangan nyo yung i-memorize. Now, pumunta tayo sa commercial paper. Now, sa commercial paper naman, ito yung mga unsecured short-term promissory note issued by large, strong credit rating companies to other companies and institutions such as trust funds, banks, and insurance company. Now, and these commercial papers can be obtained through the money market. Ito yung money market daw is a type of financial market for trading of short-term securities. Now, ano tong commercial papers? As you can see here, ito yung mga promissory notes na ini-issue ito yung mga promissory notes, mga unsecured sila, na kung saan short term rin sila na ini-issue ng mga companies na may strong credit rating. And as we know, strong credit rating is an evaluation on the credit risk of a company na kung saan ina-assess yung kanyang ability to pay the loan and yung kanyang risk na baka ma-default siya in paying the loan. Yun yung credit rating. Na since ang pinapertain dito strong credit rating, ang meaning lang yan, itong companies na to, they have the ability to pay their obligations and malayo yung chances o yung probability na magiging default sila. So, kaya ang mga commercial papers, marketable yan. Kasi it is issued by strong credit rating companies. Meaning, may kasiguraduhan na mababayaran or malaki yung probability o yung possibility na yung mga commercial paper na yan is mababayaran. Kaya nagiging source ng short-term financing. As you can see here, it is traded or obtained through a money market na kung saan nagtitrade yan sila, nabibilan nila o ibibenta nila yung mga commercial papers na hawak nila o yung mga commercial papers na gusto nilang ma-acquire. So, ano bang advantages or disadvantages ng isang commercial paper? Well, first, advantages niya is less costly than trade, credit, and bank loan. And second, not subject to possible restrictive covenants and contained in most bank loans. As you can see here, lalo na sa mga bank loans, medyo stricto talaga ang mga bank loans before they will extend credit to other companies. Bakit? Kasi ang mga bangko, nagme-make sure yan sila na mababayaran sila. Itong mga commercial papers, since the companies need funding, the companies need financing, kailangan nila nagiging less stringent, nagiging less strict sila when it comes to commercial papers as opposed to the bank loans. Now, pero itong commercial papers may disadvantages din. Ano yun? Well, commercial papers have fixed maturity, exposing it to liquidity risk, the risk of non-conversion of the security into cash at maturity. As we can see, short-term to sila. So, ibig sabihin, within the operating period or within 1 year, dapat itong mga commercial papers na to, dapat mabayaran na. Kasi nga, short-term siya. Kaya, yung liquidity risk niya, tumataas kasi malapit na yung time na kailangan bayaran or isettle tong obligation na to. And lastly, commercial papers have limited access and user availability. Bakit? Kasi itong mga kukonti lang mga companies na confident or may strong credit ratings para mag-issue ng commercial papers. And itong commercial papers na to, ini-issue lang yan ng mga companies kapag kailangan nila ng financing. And considering the fact that strong credit companies are usually the companies na maraming funds, bakit sila mag-i-issue ng commercial paper? So, bibihira lang magkaroon ng issuance ng commercial papers into the market. Kaya, limited access and user availability is a disadvantage of commercial paper. Now, ano ba ang cost ng commercial paper? Well, may explicit cost siya. Effective interest cost plus the issue cost. Siyempre, pag mag-i-issue ka ng commercial paper, may gagastusin ka dyan apart from the interest in relation to that. So, ito ang computation niya, effective rate, kung saan yung discount rate equals to issue plus interest plus issue cost divided by the face value minus interest minus issue cost times number of days in a year divided by days to maturity of the paper. Now, natapos na tayo sa unsecured sources of short-term financing. Punta naman tayo sa mga secured sources of short-term credit. Now, ano ba tong secured source of short-term credit? Well, palagay dito. These are short-term loans that use some specific assets as collateral in securing the loan. So, meaning lang yan, may mga stipulated agreement na kung saan if, for example, hindi nabayaran yung utang, yung collateral na lang ang ipapamamalit doon. doon na lang kukunin yung pambayad sa utang. Now, bakit yung ginagawa? Well, nakalagay dito, to secure the payment. Secured, kaya nga secured eh. To secure payment, para magkaroon ng guarantee na si creditor, kahit anumang mangyari, meron siyang marireceive, mababayaran yung pinautang niya. Kaya, secured sources of short-term credit. Now, since alam natin na may mga collateral sa mga short-term short-term credit na to, ano yung mga kino-collateral? Well, dito nakalagay. Assets typically used as collateral in secured short-term credits are accounts receivable and inventory. Now, bakit ito lang? Well, considering the fact that we're talking about short-term credit, siyempre, ang gagamitin mong collateral na assets are short-term or current assets. Now, and out of all that current assets, ito yung typically na ginagamit. Si accounts receivable at si inventory. Now, punta tayo kay accounts receivable. Well, ito na. Well, pag naalala nyo sa part, isa to sa mga definition ng accounts receivable or also known as trade receivables, mga financial assets ng isang company arising from the sale of company's goods and services to customer. They represent a contractual right of the company to receive cash from the customer. So, and the use of accounts receivable in obtaining loans are considered to be common to most enterprises because of its being attractive to most lenders due to its liquidity. So, kaya daw maganda ang gamitin na collateral si accounts receivable kasi yung always tong meron ang company. Always merong accounts receivable ang company. Bakit? Kasi you're operating your business. Normal operations na yan sa isang business. So, most probably or guaranteed na merong accounts receivable yan. And considering the fact that accounts receivable are very liquid assets na kung saan madali lang silang i-convert into cash. So, considering these facts, naging attractive ang mga accounts receivable to be collateral sa mga short-term credit financing. Now, dito nakalagay, two means of using accounts receivable and obtaining short-term financing. So, kung matatandaan sa discussion natin sa FAR, nakalagay doon yung receivable financing. Now, as you can see here, tatlo lang yung sinabi, pero yung sa FAR natin, 4 yung binigay sa atin. Yung nawawala dito is si discounting of notes receivable. Bakit? Because as we know, discounting of notes receivable, itong mga notes receivable na to are long-term or non-current liabilities. E ang pinag-usapan natin dito is short-term financing, meaning yung mga current liabilities lang. Kaya si pledging, assignment, and factoring of accounts receivable lang ang nandito. Wala si discounting of notes receivable. So yun. Ito yung mga means na kung saan, ito yung mga ways or methods na kung saan yung accounts receivable nagiging collateral sa short-term financing. First is the pledging or assignment of accounts receivable. Kung tatandaan natin si pledging is the hypothecation or hypothecated. Side note lang. Si pledging this is a form of accounts receivable financing wherein a certain amount of accounts receivable are pledged or assigned as a collateral to a loan. Now, ano ang pledging process? Well, ito yung pinagdadaanan when it comes to pledging. Selection and evaluation of accounts receivable used as collateral. So, pipili ka alin sa mga accounts receivable mo ang gagamitin mo as collateral, and adjustment of receivable value for allowances usually on a fixed percentage. So, i-assess mo na ano yung proper valuation ng iyong accounts receivable. And with that, magkakaroon ng determination sa amount of loan na ibibigay sa iyo. And if tamang pagkakalala natin, usually yan, mas mataas yung amounts o yung value ng accounts receivable na i-pledge or assign mo as compared sa amount of loan na marireceive mo. So usually ganun yung process eh. Now, pledging can be made on a notification or non-notification basis. Now, ano to sila? Well, sa non-notification basis, si borrower continues to collect from the customer the amount of the receivable and remits the same to the lender. So, hindi inform ni borrower sa kanyang mga customers na ginamit niyang collateral yung accounts receivable. Kaya si borrower pa rin na magko-collect ng payment, tapos si borrower, yung payment na yun, ipapasa niya, i-remit niya sa kay creditor or kay lender. Now, sa notification basis naman, si borrower, ino-notify niya si customer para si customer na yung directly mag-remit ng payment ng pangbayad kay lender para relax na lang si borrower, si customer na ang bahalang mag-remit ng payment kay lender. So, notification and notification. Now, ano bang mga advantages and disadvantages ng pag-pledge or pag-assign ng accounts receivable? Well, ang advantage na is flexibility in the use of accounts receivable as collateral, given the fact that accounts receivable is found or can be found in businesses, because businesses usually are operate because it is normally found in the normal operations of a business, so madali siyang makita. And these accounts receivable are very liquid assets, madali silang i-convert into cash. This is why flexible ang accounts receivable para gamitin collateral. Kaso may disadvantage din, relative higher cost compared with other short-term financing sources. Bakit? Well, as we can remember, as we've said kanina, kapag magko-collateral ka na accounts receivable under pledging or assignment, usually mas malaki pa yung value ng accounts receivable na i-collateral mo as compared sa amount of loan na marireceive mo. So, parang medyo lugi ka kung titingnan, kung i-compare mo yung valuation. So, that is a disadvantage. Now, ano bang cost ng pag-pledge mo sa accounts na receivable o sa pag-assign mo? Well, may explicit cost siya, which is the effective cost. Kung saan ang computation niya, interest plus the processing charge divided by the face value of the loan. So, yan yung kay pledging or assignment of accounts receivable. Pupunta naman tayo kay factoring. Now, ano ba itong si factoring? Well, si factoring daw, this is a form of accounts receivable financing which involves the outright sale of the accounts receivable account or of the accounts receivable itself. Usually at a discount para maging attractive sa mga buyers to a finance company known as a factor. So, itong si factoring daw, basically, ito yung pagbebenta mo ng accounts receivable account sa mga financing companies which are called as factor. And yung pagbenta mo sa kanya is usually as a discount. Bakit? Kasi, take for example, you have an accounts receivable of 1 million peso. So, ibebenta mo yung 1 million peso through factoring. Na, kapag bibili niyan sa'yo at 1 million peso, walang kikitain ang factor from that accounts receivable. Kasi, pag nag-mature yung accounts receivable, 1 million din yung marireceive niya. So, kaya, yung accounts receivable, you will sell it at a discount. Let's say, 50,000 discount. So, ibibenta mo yan at 950,000 pesos. So, bibili ni factor at 950,000 pesos. Then, si factor, pag nag-mature na yung accounts receivable, pag binayaran na yan ng customer, si factor, ang marireceive niya is 1 million peso. So, kumita siya ng 50,000 pesos. Now, bakit yun nangyayari? Kasi, para maging marketable, para maging mas interesado, mas maengganyo ang mga factor na bilhin niyang accounts receivable na yan. So, dapat binibenta mo yan siya at ay discount. Now, ano bang process sa pag-factor ng accounts receivable? Well, selection and evaluation of accounts receivable uses collateral. So, pipiliin mo dyan alin yung magandang ibenta. And second, determination of loan amount, consideration of retention of certain amount for any allowance and returns. Now, factoring of accounts receivable are usually done on a notification basis and are oftentimes made on a non-recourse. So, hindi na pwede bawiin. The substantial transfer of present returns of ownership to the receivable is made. As we can see here, since sale naman, outright sale naman siya, meaning lang yan, yung ownership or yung control over that accounts receivable na transfer na kay finance company usually. Kaya on a notification basis, para yung pag-remit ng payment diretso na kay factor, and since non-recourse na siya, yung risk and return, yung control over that accounts receivable, yung ownership over that accounts receivable was already passed to the factor. Well, common sense naman kasi it is considered as an outright sale. Now, ano ba ang cost of factoring accounts receivable? Well, explicit cost niya is effective cost. Kung saan ang computation niya is interest plus factor fee or the commission divided by the face value of the loan minus the factor fee or commission minus the interest minus the reserves or retention money, also known as factor holdback, times the number of days in a year divided by the credit term. So as we can see, itong denominator na to sa baba, it can be simply stated as the net proceeds ng loan. So ulitin ko lang, itong denominator sa baba, it can be simply stated as the net proceeds ng loan. Now pumunta naman tayo sa another good collateral, ang inventory or the merchandise or finished goods. Now, itong first paragraph na to, inventories are goods or items which are held for sale in the ordinary course of business, or those which are in the process of production for such sale, or those materials or supplies that are to be consumed in the production process or in the rendering of services. So, raw materials, work in process, and finished goods. Ito yung pinag-pertain ng mahabang sentence na to. They also encompasses those goods purchased and are held for resale by the company. So, ito yung wholesaler or retailer. Yun lang yung pinag-pertain ng first paragraph na to. Si raw materials, si work in process, si finished goods, and yung mga wholesaler or retailer companies. Yun si inventories, yung mga assets na yun. Now, because of the marketability of inventories and their market value being usually higher than the book value, well, of course, kailangan mo yung patungan para kumita ka. Useless naman kung ibebenta mo yan at cost. Yun, ginagawa lang yun kapag no choice na ang company. Inventories are also desirable forms of collaterals or loan because of their marketability. Bakit? Kasi marketability means madali siyang ibenta. And kapag madali siyang ibenta, meaning mabilis ma-convert into cash. Pero, or however, not all types of inventories may be used as collateral. So, meaning not all inventories are created equal. Yung mga best inventory items daw na magandang i-pledge as collaterals for loans are those that are highly marketable and generic in nature. Meaning, yung basically, ang sinasabi lang nito, the best inventories na pwedeng gawing collateral sa mga utang or sa loans are those na madaling ibenta. Madaling ibenta means madaling i-convert into cash. Now, ano yung mga forms of inventory financing? Well, tatlo sila. Si blanket or floating inventory lien, si trust receipts, roll and chattel mortgage, and si warehouse receipt loan. Now, ano ba tong si blanket or floating inventory lien? Well, ito yung under this form of inventory loan, the lender has a general claim over the inventory items held by the borrower. So, because of that, may general claim siya. There's no specific item that is assigned to the loan. Kasi nga, general claim lang. The borrower in this type of inventory loan retains full control of the inventory, over the inventory. So, yun si blanket or floating inventory lien. Sasabihin lang ni lender, uy, I have general rights, I have general claims over your inventory. Those are my collateral, or those are the collateral in our agreement. So, yun si blanket floating inventory lien. Pagdating naman kay trust receipts, loan and chattel mortgage, under the trust receipt loan and chattel mortgage, certain inventory items are specifically identified and are used as collateral loan. So, nagiging, as compared kay blanket floating na kung saan general claim lang, pagdating kay trust receipts and chattel mortgage, nagkakaroon na ng specific claims. Ini-identify mo na, specifically identified na alin sa mga inventory items ang magiging collateral. Oftentimes, these inventory items are identified via serial numbers para maging specific ka talaga sa pag-identify. Now, the items used as collateral are still being held by the borrower. So, si borrower pa rin ang may control over that inventory. Meron lang specific rights si creditor or si lender over those inventory. Now, sa chattel mortgage daw, the sale of inventory items may not be done unless consented by the lender. So, mabebenta lang ang inventory kapag kinonsent na ni lender. Sa trust receipts naman, iba. Kasi, the trust receipt is generated and is being used in selling of the items. Meaning, there is general permission on the sale of the inventory items by the borrower in trust of the lender. Na kung saan, hindi na kaya may permission na o may consent naman ni lender na pwedeng ibenta ni borrower yung mga inventories. Then, the proceeds from that sale of which should be remitted by the former to the latter. So, yung proceeds from that sale, ipapasa na ni borrower to lender. So, yan si trust receipts, loan, and chattel mortgage. So, si blanket, general claim lang. Pagdating kay trust receipts and chattel mortgage, may specific claim na, specifically identified na yung mga inventory items na gagawing collateral. And lastly, si warehouse receipt loan. Ano to siya? This is an arrangement whereby the lender receives full physical and legal control of the identified inventory collateral, which is stored under the care of a warehousing company serving as an agent of the lender. So ito, na-transfer na yung inventory na naging collateral, yung full physical and legal control of that inventory na-transfer na-receive na ni lender. Then, considering na transfer na yung physical and legal control of the inventory, may two types of warehousing agreement. Kung saan sa terminal warehouse receipt loan, yung inventory nilagay sa or in-store sa isang public warehouse. Na kung saan yung may-ari ng public warehouse na yun, nagiging receiving agent siya. Parang siya lang yung tagahawak or tagabantay for the meantime ng collateral inventory na yun. Sa field warehouse naman, ang pagkakaintindi ko dito is yung inventory nasa warehouse or nasa lupa pa rin siya, nasa property pa rin siya ng borrower. Pero yung mga specifically identified inventories na yun, it is physically or actually segregated from the other inventories. So since it is physically or actually segregated from the other inventories, yung physical and legal control over that inventories na kay lender pa rin kahit na nakalagay sa same property, sa same location with the other inventories ni borrower. Kasi nga, physically segregated na siya from the other inventory. So, si terminal warehouse, sa public warehouse siya nilagay, sa field warehouse, doon pa rin sa property ni borrower, pero physically segregated na siya from other inventory because the full physical and legal control of those inventories are transferred kay lender na. Now, anong mga explicit cost ng warehouse receipt loan? Effective cost. Kung saan ang computation niya is interest plus warehousing fee divided by the net proceeds of the loan times the number of days in a year divided by the term of the loan. So, sa inventory, tatlo ang ways para gawin siyang financing collateral. First is the blanket floating inventory lien. Second is the trust receipts loan and chattel mortgage. And lastly, the warehouse receipt loan. And that's our discussion for this day or for this time. Ang working capital financing strategies, kung saan ang meaning lang niya is ito yung mga ways o ito yung methods na kung saan hahanapan mo ng paraan para magkaroon ng funds to finance your short-term or working capital. Hahanapan mo ng paraan saan ka makakuha ng pera para i-finance yung working capital mo. So,